Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. Now in today's video, we are going to be talking about the top recession-proof stocks for 2022. A lot of people are saying, oh my gosh, and they're freaking out saying that we're gonna have another recession, another crash. So these are gonna be some solid stock picks to hold if we go through a crash. And honestly, in my opinion, I think they're all fantastic picks, even if you just don't go through a crash. A lot of these are gonna be higher growth stocks, blue chip stocks, and a couple ETFs. So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button and subscribe to the channel. So now, roll the intro, let's go, come on. Alrighty guys, so stock number one is ticker symbol WM. This is also known as Waste Management. This is by far one of my favorite stocks out there. Now, if we go through a recession, do you think we're gonna stop throwing stuff away? Absolutely not. And that's what Waste Management is. They're pretty much trash collectors. And you can see over the past year, we've just had beautiful growth from this, right? Lows at 109, highs here at about 168. And if we actually just bought it year over year, we're looking at a return of right at about 37%, which is still outperforming the S&P 500, the Dow Jones, the NASDAQ, and on top of that, you guys are going to get paid a fantastic dividend of around 57 cents every single quarter. This is by far one of my favorite picks, and if you don't have it, I would highly recommend picking up a couple of shares. Not to mention, guys, all of these stocks are going to be fantastic for dollar cost averaging, because they're all such good long-term contenders. So just be consistent with your investments, pick up a couple of shares and hold it for the long term. You can start compounding your account, and it's just a great way to build wealth. Stock number two is VIG. So this is Vanguard's dividend appreciation ETF. So this one's going to be a little different because it's an ETF. So it pretty much has a pool of different stocks. Now, one of the main reasons why I love this one in general is because you're gonna get paid a dividend every single quarter, and this is gonna be a fantastic ETF because all of the holdings are dividend growers. So you'll have companies like Home Depot, Johnson & Johnson. You'll have a variety of fantastic dividend payers. So it's a great way to build wealth on the growth side and have some passive income rolling in. Is just by far a good solid one to keep on watch. Stock number three is J&J, also known as Johnson & Johnson. Now this one's going to be a little more volatile. If we actually look at the chart here, it does go up and down at a little more of a rapid rate. But why a lot of people hold this is during every single crash we've had over the past 10 years, Johnson & Johnson has not fallen as much compared to the S&P 500, and it has recovered faster. So it's something to understand with that as well. And it does have decent growth year over year. So if we would have bought it about a year ago, we're still looking at a return of about 7%, which is a little lower, but still one to keep on watch for sure. It's definitely going to be in that, medical sector. So if you want to change sectors, that's a good one to have. Not to mention $1.06 every quarter. So you can start building up that passive income, start compounding your account. Stock or ETF number four, we have VUG. So VUG is going to be another Vanguard ETF. Now this one is going to be a growth ETF. So what's different about this one and the dividend is the other one focused more on the dividend side, and this one focuses more on the growth side. So if we actually would have bought it year over year, we're looking at a return of about 22%, which is pretty decent. And if you would have bought and sold at the highs, about 30%, which is actually pretty decent. Does have that great trend line for support, as you can see. So every time it hits right in here, we can actually remove it so you can see it a little clearer here. So you can see that great trend line that the stock has had. You can see every time it hits that trend, we just get that natural buying pressure, which is awesome. So stock number five is Microsoft. Microsoft is just a no-brainer investment. It's going to do well in recessions and growth markets. It's just one that people are always going to use computers, and that's just kind of the world we're in. Yeah, it might sell off a little bit, but it's going to be coming back very, very strong. You're going to get great growth from this, as you can see, about a 49% return, which is fantastic. Not to mention you're going to get paid a 62-cent dividend every single quarter. So might as well pick up a couple of shares if you don't have one already. So the next stock here is ticker symbol HD. This is Home Depot. Home Depot is by far one of my favorite growth stocks out there. And you can see the year over year return is pretty solid, rated at about 50% of value. So for those of you think that Home Depot's Not worth it? Well, it does actually perform a lot better than a lot of traditional growth stocks, and you're going to get paid a great dividend, $1.65 every quarter, so you can start compounding your account, you can start building up your account growth wise. Just a stable company. And another one that's kind of piggybacking off that is Costco. Costco is another fantastic stock. You can see great growth. If we would have bought it year over year, we're looking at a return of about 46%. Bought at the lows here, sold at the highs, return of about 82%, which is awesome. So you're going to get great growth, and you're going to get solid dividends every single quarter. Not to mention, Costco does have this tendency to pay a special dividend. If we actually go out and see it, you can see it right here. It's a $10 per share dividend. I remember when this came out, and I got a couple, I got like $30, which is awesome. At the time, I would have done a lot better, but it's still fantastic, right? This is a stable company, not going anywhere anytime soon. They bring in billions of dollars, great business model, and it's just a solid stock, and I would highly recommend picking up a couple of shares. So guys, these are going to be the top stocks that I would recommend picking up if we go through a market crash or a recession. Alrighty guys, that is it. I hope you guys enjoyed the episode, and if you did, hit that like button, subscribe to the channel, and if you want to learn more about investing in the market, don't forget to check out my course down below. And that is it. I hope you guys enjoyed it. Remember to stay happy, stay positive, and stay safe out there. We'll see you later.